Hello, hello, hello. Welcome in, everyone. How are we doing today? Let's get the economic calendar up. All right, real quick, could I get a mic check? Make sure you guys can hear me and that you guys can see the economic calendar. With Cam today, yes, sir, Sigma. Doing some different stuff. 555, all good. All right, sweet. Thanks, Sigma. Thanks, Mad Joker. Momentum Trader, what's going on, brother? Thanks for joining us. You Bean, let's get it, my man. Denisha, always stay ready. Absolutely. Hope everyone's good. Hope you had a great weekend. Hope you're well. May, thanks for joining us. Football Sunday, Dora Trading Sunday. Absolutely. We're here about getting the bread. Denisha, audio great. May, hello, Hans. Thank you, thank you. Mad Joker, good night from Spain. Olawale, happy Sunday. All good. Sounds good. Great. Momentum Trader, my man. David A, give a shout out to Ramsey. I'm not sure what that is, but shout out to that. All right, guys. So rolling with the camera today. So let's get into it. So let's get into the intermarket analysis, what it is we'll be looking for today and going into this week. As you know, this is the place for pre-market analysis. Everything you need, every expectation going into this week will be covered here. So with that, let's go ahead and get into it. Looking at the economic calendar for this week. No high impact news drivers for USD in particular, Monday through Tuesday. So I personally will not be looking to do much these 2 days, as I'm expecting the volatility to come in Wednesday, Thursday into Friday. So we have CPI on Wednesday to kick things off, core PPI, retail sales, PPI, and then Empire State Manufacturing Index at 8:30, and then consumer sentiment at 10 o'clock. So like I said, the economic calendar is stacked towards the latter portion of the week. And then as you guys know, the economic calendar is our roadmap. It tells us when these setups are coming and when to expect the large range expansions. So with that, as you guys know, I'm going to predominantly be trading those days. So Wednesday through Friday is when I'll be looking to do most of my business. So with that, everyone, let's go ahead and get into the technicals. Fulcrum Point, good morning from the Philippines. Thanks for joining us, Fulcrum. All right, so let's go ahead and get into the technicals. Monday, Tuesday, accumulation. Wednesday, manipulation. Thursday, Friday, distribution. Absolutely. That's exactly what I'm expecting. And just understanding the economic calendar. If there's no high impact news drivers, it's likely to consolidate, be range bound. And then CPI, any of those three news drivers, FOMC, CPI, or non-farm payroll, will typically be violent, clear both sides of the board. We'll expect the manipulation to come into the market then, and then expect nice distribution Thursday going into Friday. So that's what I'm going to be looking for going into this week. So with that, let's go ahead and get into the technicals. So looking at dollar index here on a monthly chart, I took our attention last week to this swing low that we had formed. Below these equal lows, so sell stops cleared inside of a discount and then creating the swing low. I shared insight with you guys with regard to how I utilize swing lows. And as we know, the swing low is the 3-candle formation, which with a higher low to each side of it. The reason that's helpful in my analysis is because that fourth candle, which is the one we're currently trading in, it gives us a solid bias to just expect a continuation after the swing low is formed. So that's how I was able to take our attention last week into the buy side of this candle here at the 104.7 and beyond. So I will be looking for continued higher prices on dollar, expecting this monthly candle to continue expanding. I'll be looking for the buy side here at the 1.05 and then the SIBI here, or the fair value gap, assuming we get animation through the buy side. So still looking for bullishness in dollar index. Dropping down into our weekly chart, let's keep refining it. So these last two down close candles, that's our bullish order block. I like this as an order block because it's the two down close candles that swept the sell side liquidity. So this right here, this move lower, pulled a lot of large funds into the market, a lot of large funds looking to get short after the support has been broken. Where's their stop loss going to be? They're going to look to place a stop loss either at the most recent swing high here or a more conservative stop loss here. So what the smart money entities are going to look to do is they're going to look to clean those traders' clocks. So they dragged them into the market, trapped them short, and now they're going to rake them across the coals, taking the market into the buy side here and here, as we were expecting. There's a little bit of narrative for you guys. And they're going to expect that to continue into the buy side here, and then ultimately into this buy side here. And then I'll share some confirmations in the lower time frame that's telling me why we're going to deliver to that specific high. So one other thing I did want to touch on is just looking at the dealing range that we're in from high to low. So external range liquidity was taken here. So we're going to expect a measure of internal, as we have been looking at this high, then this high. The reason I specifically like this high again, just recovering what I discussed last week, is because looking at equilibrium here, that is the first swing high that's in a premium. So that's the specific buy side that I'm expecting the algorithm to look to reprice into. So again, looking at this weekly bullish order block, why is that significant? Institutions or smart money is buying the down close candles. So as we trade back up into it here, beautifully hitting that opening price, that allows smart money to recapitalize that liquidity and reaccumulate longs. Why is that beneficial? Because just as you and I were, smart money was also looking for price to deliver into this swing high here and then here. So we're going to look to reaccumulate inside the discount arrays to send us higher. Also took our attention to this weekly volume imbalance, how we hit that, used it as support. So no confusion as to why we were looking for higher prices. All right. So dropping down into the daily chart. So there's that monthly buy side that we were looking at last week. Beautiful expansion into that. And then past that, I took our attention into this small buy side here at the 105s, and then the volume imbalance here in blue. Beautiful repricing into our key levels, so plenty of potential profitability from where we opened to where we ended up trading to. So again, order flow is clearly bullish. We do not try to call tops or bottoms in the market. We trade what we have in front of us. So again, equal lows, trades down into that, runs the stops, or engineers short interest in either the funds or retail, and then those traders are then trapped short. That's how I was able to qualify this as an intermediate term low before the fact, and then we've seen the delivery that has followed. So moving forward, I will be expecting this buy side here, but before we get to there, we do need a trade above this volume imbalance on a closing basis, and then we could potentially use it as support to send us higher into the buy side here. And then through this buy side, my attention goes to the buy side here at the 107. So through that, my attention will go to this high here. But again, we need to see how we trade there. I would like to see displacement and aggressive movement higher through the buy side liquidity. So you guys see, I qualified this as a consolidation. Real quick, just touching on a couple things. So from the inception here to the terminus, or where I think we're going, equilibrium, this is where consolidations and turtle soups occur. But also, you guys see I have this qualified as a measuring gap. How would I possibly know it's a measuring gap before it leaves it open? Reason being is because it's at 50% of the anticipated run. So I prefer to see this measuring gap left open if we are going to deliver to this premium internal range buy side liquidity. So we should not fill this in. If we trade into it, it wouldn't be problematic. It wouldn't invalidate my bias. I just prefer to not see it trade into it and leave it open, because then that would give me further confirmation that the buy side in here is indeed the target. So as you guys know, we've been calling all foreign currency lower as a result, and you could take that analysis straight to the bank. All right, so nothing much more here on the daily chart. Let's drop down into the hourly. All right, so hourly chart here, consolidation last week, as we've pretty much seen across quite a few assets. Also looking at the indices, NASDAQ, S&P also went into a bit of a consolidation. So I'm expecting CPI to take us out of this consolidation. But one of the biggest reasons I'm not looking to trade Monday, Tuesday is because, one, the market structure isn't clean, but also the fact that there's no high impact news drivers. So we could very easily continue consolidating until the wrecking ball CPI comes into the market and gives us some displacement. So just to refine this a bit further, like I said, we have a consolidation. If we are bullish, Keep in mind this blue rectangle, just going back up to the daily chart, that's that daily fair value gap. So dropping down into the hourly chart, it would not be problematic for the market to punch into that daily fair value gap, clear out the sell stops, and then run higher. However, if we do that, I would monitor how we trade in the daily fair value gap. We should find support. I prefer not to see us get below consequent encroachment, and then that would give me a beautiful bias, bullish going into the latter portion of the week. Again, this is also looking like a bit of a bull flag, and as you guys know, I am not a fan of that. I actually look to fade those patterns. So equal lows, bull flag, I prefer to see them run lower and then take it higher. It does not need to do that. It's just what I prefer to see going into the week. And I told you guys I'll be using Monday and Tuesday to gather intel to trade Wednesday through Friday. So with that, let's go into the bond market, further qualify what we're seeing here in the dollar index. So again, just a little refresher, I am looking for bonds to trade down into this sell side here, equal lows, and this fair value gap in here. So quite a bit of ways to go until we reach my monthly draw on liquidity, but just looking at the order flow, clearly bearish, so I'll just expect that to continue. So weekly chart for T-bonds, bearish order flow, inversion, fair value gap, respecting that. Trading higher into this last up close, which is our bearish order block, rejecting lower. So I told you guys that after we took out this sell side here, or external range liquidity, it's not out of the realm of possibilities to see a retracement, because we typically expect external to internal and then internal to external. So I was watching how we were trading higher because I was expecting the retracement, and then I was monitoring specifically this mitigation block. So looking at the lowest down close before the rally higher, that's our mitigation block. So we traded into that mitigation, and then we've seen a nice rejection lower. So also seeing a swing high on that weekly chart. So I will be expecting the market to deliver to external to this low. And then as you guys know, longer term, my attention is down here at the 108s. $2022 model on the daily, absolutely, exactly. So we'll go ahead and get into that, Sigma. Good point. When showing chart, make sure it's not blocked out by the camera. Okay, appreciate it. Yeah, that's something I need to be mindful of. Just go ahead and make that smaller, actually. Boom. All right, that should be a bit better. All right, so looking at the daily chart here. Yeah, I apologize if the camera's in the way. Still getting used to the whole OBS. All right, I think that should be better. All right, so looking at the daily chart here for T-bonds. So we've been calling this market lower. Looking at the sell side, equal lows in here. Beautiful repricing into that as we were expecting. And then we were all over that like white on rice all the way from up here, giving us our beautiful risk-off bias, expecting dollar higher, looking to go lower foreign currency. So looking at this price action here, like I said, external range liquidity to internal, repricing to this last two up close candles. So that's our bearish order block. Monitoring how we traded there, swing high, and then displacement lower. So as someone said in the chat, 2022 model, absolutely. Traded higher to a premium, fair value gap, displacement, shifting market structure here, and then we have 2022 model. So what I'll be looking at going into this week, I do like how we displace through the low, showing no respect for this down close candle, which is a mitigation block. Trading up into the mitigation block and bearish order block, the last 4 consecutive up close candles, which is where the change in state of delivery occurred. Again, what is change in state of delivery? So here we went from expansion, retracement to expansion. Within those price delivery cycles, there needs to be a change in state of delivery. The change in state of delivery is occurring as soon as this opening price here is pierced. And then the market enters a sell program where it seeks discount arrays and continues offering the market lower. So seeing how we displace lower, repriced up into the mitigation, and bearish order block and fair value gap, we should see the market sell off from there. So as long as we remain below the mitigation block here, I will be looking for lower prices on bonds and trusting buy models in S&P, or not S&P, excuse me, dollar index. So looking at this here, we should not get above the mitigation block if we are going to be bearish, and I expect us to continue expanding. First target here in the previous week's low, and then looking at this external range here at the 117s as a target after that. And then because we are not inside of a range, just zooming out, you do have to use fib extensions. So I would anchor the Fibonacci to a intermediate term price swing, and then I would use that to get further price swing. So through this low here, I'm looking at the 116.19, and then that would be a nice downside objective through this low. All right, so real quick, looking at the interest rate market. So again, retracing into a discount, staying above this inversion, fair value gap in here. Consecutive down close candles, trading up through it, bullish order block, repricing into the opening beautifully and giving an expansion higher. So overall, going to be looking for higher yields, which is also going to put some lift in the dollar index, giving us our risk off bias going into this week. So again, looking at the 10-year yield, same thing, traded down to a discount, qualified this SMT to you all guys, real time, sharing how because one of the bonds or the triads failed to make a lower low, they indicated that smart money accumulation. And then again, beautiful delivery as a result. So again, no surprise to us as we were all over it. So with that, let's go ahead and touch on the Forex markets. Perfect now, great. So looking at the monthly chart for Euro, swing high as we covered last week, and then nice expansion lower as a result. So just looking at Euro, I'm going to be looking at the sell side here, and then sell side here longer term, and then eventually this buy side imbalance, sell side inefficiency longer term. So weekly chart repricing to the volume imbalance as we were expecting. 3 drives pattern, 1, 2, 3, failing to continue displacing, and then we've called it lower. So just looking at the delivery from this week here, 1, 2, 3, 4, 5, 6, 7 consecutive down close weeks as we were expecting. So this is why having a bias, understanding where the market is reaching on a higher time frame pays off. Because if you are looking to go short, your probabilities of your trades panning out is much higher probability than just being on a 5-15 minute chart chasing entry patterns. The key is understanding where we're going on a higher time frame, because the lower time frames will manifest delivery to deliver in alignment with what the higher time frames are looking at. So 15-minute hourly charts, if we're bearish here, what are we looking for? Stop runs, turtle soups on highs, rejections, and continued lower prices. So by understanding the higher time frame, you're never caught off guard by anything, and you know exactly what you're looking for, and most importantly, how to take it down. So just looking at the weekly chart here, looking for continued expansion lower for the sell side here. Through the sell side, I'll take my attention to 50% of this wick. So sell side here at the 106.3. Through that, I like the consequent encroachment or midpoint of this wick, which is the, call it 106 big figure number. And then acceleration through that takes us into the equal lows here. And then that's where my interest lies longer term. So calling these objectives all the way from up here. So plenty of room for potential profitability, obviously assuming if you have a model and understand how to trade. So that's what I'm looking at longer term. So I'm going to continue looking for lower Euro. I know we have quite a few Forex traders in here, so I think I might just start including pound as a part of the analysis. Then I'll go ahead and get to the member questions. So bearish order flow on that daily chart, as we can see, all up close candles or bearish order blocks are being respected. Inversion, fair value gap here, we've been looking at for some time. trading up into it, and then displacing lower. So again, I prefer to see this fair value gap left open. That would qualify a measuring gap for me. Just looking at the section where I eventually think we're going, which would be the monthly fair value gap. So looking at the sell side here, so that's right about 50% of the move. Also, measuring gaps or breakaway gaps form after consolidation. So we have a lot of consolidation back and forth, and then the market is in a hurry to reprice, so it's going to break away from that efficient delivery or balanced price range. So it's not going to need to reprice into this for efficiency as we would expect. So there's levels to it. It's not just fair value gap, it should trade into it. There's also a greater context that needs to be understood. And as you know, I'm providing that here every week for you guys. So going into this week, as long as we remain below this blue fair value gap, or this blue rectangle, which is a fair value gap or SIBI, sell side imbalance, buy side inefficiency, I will expect us to accelerate lower. So just looking at last week's delivery, all of our levels were hit. I had this sell side as a target, and then we looked at the rejection block, which is the lowest down close right here. Beautifully trading into that, and then pulling back into the range for a, thank God it's Friday, TGIF trade. So again, invalidation levels above this up close candle, I prefer to not see us get above there. And I would want to see us drop from this daily fair value gap and then accelerate lower for the stops here. And then animation through that takes us into these equal lows. All right, so hourly chart. So trading higher going into Monday, I told you guys that I would want to see the market drop from here specifically. So not dealing with any ambiguous zones or random levels, looking at very precise, specific levels where I'm telling you guys we should see a reaction from. So this becomes an intermediate term high. I do not want to see this violated. I told you guys we should trade up into here for a little Judas swing or manipulation for the weekly candle, and then expand lower as we did, each day taking out previous day's low beautifully. So again, we're in a bit of a consolidation. I will wait for the expansion. As we know, expansion always follows consolidation. So price delivery is very generic. It's only doing the same exact four things. It's either consolidating, expanding, retracing, or reversing. And they follow a very specific sequence. So after consolidation, there needs to be an expansion. I don't try to time consolidations. I'm just going to wait for the expansion, wait for market makers, smart money to show their hand, and then I'm going to be all over it, as you guys know. So again, just because of my higher time frame, bearish bias, I prefer to see us trade higher, clean out these equal highs or the buy stops, and then reject and then accelerate lower. So that's what I'm preferring to see. And then also considering we have this daily fair value gap in here, I would want to see that act as resistance. Again, we do not need to trade there. I just prefer to see us remain below that. So let's touch on pound. So looking at a monthly chart on pound, so we've retraced higher into a premium of this dealing range, trading into this inefficiency, fair value gap, and mitigation block. So trading up into there, swing high forming, and then we're seeing the subsequent price delivery. So weekly chart here, looking at lower prices, showing no regard for this down close candle as support or bullish order block. And then I qualified it to you guys real time as mitigation. So the price should remain below that and use that as resistance, or that should keep price at bay. So again, going to continue looking for lower prices on pound. Told you guys my higher time frame or medium term outlook is to the 1.23 level. So that's what I'll be looking at on the British pound. Roshan, thank you for sharing the gems. Thank you for joining us, my man. Glad it's helpful. Appreciate the feedback. All right, so daily chart for pound. So last week we were trading here on Monday when I went ahead and began the stream for our pre-market outlook. Told you guys how we should fall from the bearish order block. Like I said, not dealing with random zones, looking at very specific price levels. Trades higher, hits that opening price handsomely. And then each day, Tuesday, Wednesday, Thursday, into Friday, each gave lower expansions as we were expecting. And also using this daily fair value gap here, extending that through inversion. So we should remain below this if we are going to remain bearish. So again, we can trade higher into this fair value gap, but because we already did institutional order flow entry drill, we can just continue running lower. So repricing to all of our targets from the previous week, looking at the sell side here, and then moving forward, I will expect this sell side to be delivered here at the 1.236, and then through that, my interest lies at the 1.230. And then you can just round that off to 1.230, big figure number. And that's what I'll be looking at going into this week, as long as you remain below this daily fair value gap. So again, hourly chart, same thing, just in a bit of a consolidation. So just going to wait for that to work itself out. Understanding the economic calendar, more than likely going to occur into CPI. Not that it can't occur before that. That's just from my experience when we're likely going to break out of the consolidation. All right, so let's go ahead and look at the indices. Let's go ahead over to this one. All right. So indices. All right, so looking at the weekly chart, let's go ahead and take these off. So looking at the monthly chart here, looking at mean threshold or midpoint of this last up close candle, bearish order block, hitting that midpoint beautifully, and then rejecting, trading lower into the monthly fair value gap as we were expecting on this expansion here. Then we pulled back into the range. So looking at this monthly candle in here, gun to my head, considering what I'm looking at in dollar index, which is bullishness, I do prefer to see us accelerate lower on E-mini S&P for the sell side below this monthly candle, and also the remaining portion of this inefficiency. So that's what I'm looking at on a monthly chart based off intermarket analysis and other things I'm seeing. But as we go into the lower time frames, you guys will see that it's a bit muddy, and I'll be waiting for a few confirmations before I elect to do anything. So weekly chart here, swing high, running lower for the stops here and here. And then we've retraced back into the range. So what I was monitoring last week was this premium fair value gap. So looking at this inefficiency here, we hit that in the previous week, and then I wanted to see how did we trade here in premium valuation. Is the algorithm going to sustain that valuation and continue repricing higher, or will we retrace and start accelerating lower? So that's what I was monitoring going into last week. And then as you guys know, we saw weakness. I updated you guys in the Telegram, telling you guys where we were going on a day-by-day basis and what I was expecting. And as you guys know, the analysis pans out to script. So let's go ahead and touch on NASDAQ at the same time. Let's go ahead and do those together. Let's take these off the weekly. All right, clean chart. All right, so I told you guys that I would be monitoring this last up close candle, bearish order block. So extending that price through. And I wanted to see how did we trade there? Do we accelerate through it and show bullishness, or do we reject? And as you guys see, we traded up into it, unable to rally higher or muster any strength. So this is indicating weakness to me. So just based off the weekly, monthly, and also dollar index, I will be looking at lower prices on the indices as a result. Again, I'm going to go into the daily chart, show why it's a bit muddy. We're kind of stuck in a range, and I'm going to wait for specific things again before I elect to do anything. But just based off these higher time frames, I do not like to see for bullishness that we are rejecting here. So considering I have a bullish stance on dollar, that'll allow me to trust my sell models inside of the indices more. So looking at the following weekly candle, if we stay below this candle's high, which is the August 28th weekly candle, as long as we remain below this candle's high, I am still bearish on the weekly chart, and I will be expecting a lower weekly expansion. S&P, same thing, unable to trade up the midpoint of this consequent encroachment of this fair value gap, indicating further weakness. So I will be looking for lower prices on ES as a result. So dropping down into the daily chart. So I liked quite a few things for bearishness going into last week. So I indicated to you guys that we had a SMT. Here, seeing that S&P was unable to make a higher high here, whereas the NASDAQ did. So here NASDAQ made a higher high, and S&P was failing to. And I told you guys we formed a swing high. So after we form a swing high, the bias is, like I said, nothing's ever guaranteed. We're always dealing with probabilities here, but it's pretty much a slam dunk that the fourth candle after a swing high forms will be bearish. And that's what allowed me to trust the analysis I gave you guys yesterday, or not yesterday, excuse me, the previous week, as to why I was expecting a full repricing of the daily fair value gap. And the reason I chose to send in S&P is because that's the one I was trading short, and you guys will see why I did that. And then you guys can see here NASDAQ didn't even reprice to the low end of this inefficiency because it was the one that made the higher high. So the one that is indicated algorithmically that is weaker, that would be the better short, is S&P, because it was indicating weakness, and we saw a failure swing here with inability to get above this high. Also wanted to note beautiful repricing to the low end of this daily city fair value gap, and then nice rejection lower, swing high. This candle here unable to trade up to this candle's consequent encroachment or midpoint, indicating further weakness, and then sharing the analysis as to the daily fair value gap. So touching on NASDAQ briefly, taking out this high, hitting the bearish order block, which is the 2 consecutive up close candles here, trading into that, swing high, and then selling off. So because we're in a bit of a range, going back to S&P, this isn't a clear market to me. There's no obvious one-sided direction. We could be trading lower in this fair value gap just to reaccumulate and go higher, or we could be rejecting this premium valuation and going lower. So as you guys know, my analysis is typically not 50-50 or requiring me to wait for more information unless we are stuck in a range. And in that case, we are. Range from high to low, we're in equilibrium. And it's not really showing a willingness to want to accelerate away from that with speed. So what I'm going to have to do is wait for more information. So I prefer to see us trade to this fair value gap in here at the 44.30s going into the following week. However, we could trade higher into this fair value gap or this one. So this puts me in a position where I have to wait for more information. So what I'm going to want to see is how we break out. Not that I'm a breakout trader, but as we drop into our hourly chart, again, bearishness throughout the week. But as I said, so as we drop into the hourly chart, we see we're in a consolidation here. So considering the market structure is not very clean, we're in range-bound conditions. Looking at the economic calendar, understanding that there's no news Monday and Tuesday, we could just remain in a consolidation. CPI wrecking ball can come into the market, and then we should get that displacement on the daily chart. But as long as we remain inside of this consolidation on a hourly, there's nothing for me to do, and I'm not very interested in the market. Again, I can go in here, trade session highs, session lows, just look for 5-10 point scalps. I prefer to get a bit more meat off the bone, so I am not going to be in here trading these small fluctuations. I'm just going to wait for the market to decisively show its hand, and then as you guys know, we'll be all over it, and I'll keep you guys updated. So going to NASDAQ as well, seeing the same thing, consolidation. So I'm going to wait to see how we trade out of the consolidation. Touching on the price delivery real quick, as I said, we're in consolidation profile. So as we know, what follows consolidation? It's always expansion. We always allow for the expansion to occur. We don't try to time it. We don't try to guess. We're not retail breakout artists looking to bracket the market with shorts and longs at each high. We just wait for the market to show its hand. Reason being is because that's the one thing that we are not able to see into in terms of seeing into the future is consolidations. So this is times when my crystal ball goes dark and I don't have that usual clarity I do. Reason being is because when the market makers take it into consolidation, they can keep it there as long as they want. So we just have to wait for that expansion to tip its hand, and then, as you guys know, we'll be all over it. So that's going to go ahead and conclude the analysis that I had for today. So with that, I'm going to go ahead and see if there's any member questions, and go ahead and take some other questions if there are any. Fulcrum Point, I always watch your videos, and I'm very grateful for you providing us with quality content. Thank you very much, my man. I appreciate it. The sewing machines. High Speed Trading Company. Got the teal logo, my man. Okay, awesome. So 2-month member. Shout out to High Speed Trading Company. Let's go and take a look at crude oil for you, my man. And I trust the crude oil analysis I provided you with the last few weeks paying big time, because it sure has been for me. And also my clients as well, that I work with their longer term portfolios, commodities, straight to the bank, baby, as we've been discussing. So let's go and take a look at crude oil here on the weekly chart. So calling crude oil higher, as you guys know, CL has been spot on. Appreciate that, my man. Thank you very much. All right, so let's go and take a look at crude oil here. So again, we've been calling this thing higher. Let's go all the way out to a monthly chart. Let's go ahead and recap. A lot of moving parts as to why I called crude oil higher. So we are bullish. Clearly, expansion higher. So I saw this only as a retracement down to a discount. What specific discount? Looking at the bullish order block here on the monthly chart, body's beautifully respecting that, and fair value gap. So this meets all the criteria for a high probability bullish order block, shift in market structure, fair value gap, and it took out stops, taking out this candle's low. So trading into it here, I was waiting because, as you guys can see, looking at that line, we were in a long consolidation here. And then, as I told you guys, I have no interest in trading a market that's in a consolidation. What do I wait for? Expansion. And then as soon as we moved higher here, took out this swing high, I knew the time distortion was over. And I told you guys we'd rally from this breaker, called the market all the way up to here. So from the low 70s, called this market into the mid 80s and then beyond. So again, consecutive down close candles here on the weekly chart is that monthly bullish order block. So traded into it, stabbing into it a few times, clearing out stops. Retracement here into the 50% or midpoint of this wick, finding support, and then rallying higher. So I took our attention to this weekly fair value gap. I called it lower from the buy side here, called the retracement into the weekly fair value gap that we're seeing here. And that was more of a sell to buy. So I told you guys I'm still longer term bearish, but we are expecting a retracement, which is logical after just about 8 weeks of consecutive bullishness. So hitting the weekly fair value gap, calling it higher, and then continued expansion. So now with all that context behind us, where am I expecting us to go? So as I said, order flow is clearly bullish. We have a breakaway gap. Measuring, I want to see us expand into the buy side here. So I'm looking at crude oil into the 93s. Back up to the monthly chart again, covering this again. Longer term, I told you guys crude oil is going back to the hundreds. I'm expecting us to dig into 120s, 125s longer term. So we're looking for extreme bullishness on crude oil moving forward, just as a longer term objective. Again, that's not something that's going to deliver the following week, and there's still plenty of room for opportunity from this bullish order block where I called it higher into these premium levels. So again, let's refine this on the weekly chart. So weekly fair value gap hitting that, expanding higher. So these two down close candles now become a bullish order block. That would be an invalidation level. So we do not want to get below those down close candles if we are going to remain bullish on crude oil. So here we have a fair value gap. I prefer not to see this entire range close. I prefer to see it stay open because then that'll qualify it as a breakaway or measuring gap. And then that'll give me confidence that we're going to continue higher on crude oil. So my target on a weekly moving higher from here is at the 93.50. Through that, I like 96. And then through 96, we're going to be looking at the hundreds even. So let's drop down into our daily chart. So I qualified this bullish order block to you guys real time. Reason being, again, change in state of delivery. Sell stops here equal lows. So traders that were long, that do not know how to trail a stop properly, would just jam it up below the most recent swing low. That's why this functions in the market, to take out those stops. So as soon as we pierced this up close candle, that was the change in state of delivery from retracement to expansion. So seeing how we closed above it, hit it once, twice, and then off to the races to the target I had here and here. So looking at crude oil on the daily chart, so that blue rectangle is the entire weekly range. That's the inefficiency. So we can refine that just to the daily chart. And again, I prefer to see this lower one left open. That would be ideal. So my upside target on crude oil would be the swing high here on the daily chart at the 89.84. And then through that, I like the 93.50 level. So that's what I'll be looking at going into this week. Again, we have had a huge expansion higher. So a bit of retracement is valid. So we definitely could reasonably expect a retracement into this fair value gap. And then how we trade there will be influential. If this thing is really bullish, which we should already be positioned in it if you were looking to trade it, again, not financial advice, just information and education purposes only. But we're in too deep of a premium to look to reaccumulate more longs. So we should ideally already be positioned from here, here, or here, riding the expansion higher. So again, because we're so close to this liquidity, it does not need to retrace very much. It can give a small retracement, or it can just continue expanding higher. But again, my validation is below these consecutive down close candles. I don't suspect we get below the breaker. So this last up close here, extending this through, we should not get below this if we are going to remain bullish. So there's the analysis for crude oil. Hope that was helpful. High speed trading, my man. Appreciate you being a 2-month member. And hope you can use this analysis going into the weeks. Hopefully that gave you that clarity, brother. So much better now that I'm just taking more member questions, because I'm able to focus and give it the proper attention that this requires. So for those of you guys that want me to take a look at your specific market or want me to answer questions for you, again, wish I could be here all day with you guys, but unfortunately I can't. So I just gotta take care of the ones that show me they want it and sign up for the member on YouTube. Again, not necessary, doing all this for you guys, no charge, but if you do want a question answered and want me to look at specifics, it would be appreciated if you'd show that with the member subscription. Lo-Fi Jang, always bringing the fire, brother. Much appreciated. Thanks for joining us, my man. The Song Machines, hey from the Telegram channel. If you can you also cover RTY when you review indices? Thank you. Yeah, absolutely. Let me go and take a look at RTY. So for indices, they're all pretty much going to trade the same. As you guys know, all boats rise and fall in high tide or low tide. So looking at RTY, so in a range-bound consolidation, stuck between this candle's high and this candle's low, and we've just kind of been banging around that range. So I'm expecting us to break down, given that we're now starting to see a huge expansion on dollar. So as dollar has been consolidating as well all this time, other assets follow dollar index. That's why dollar is such a crucial, integral part of your analysis, because it does set the tone for what the market's doing. So again, just going back to RTY. Now that dollar's breaking out, we can then start seeing much more movement in our other assets. So looking at RTY here, break down through this down close candle, bearish order block. So I will expect bearishness to continue. So looking at the weekly chart, not a lot of clarity, but just seeing the displacement, fair value gap, respecting that, and trading through this last up close candle. So as long as we remain below this up close candle or bearish order block, I will remain bearish on RTY. And then I'll look for the 1830 through 1830. I'll take my attention to the 1809. And then through that, my attention goes to the volume imbalance in here. So let's go and take a look at the daily chart. So yeah, beautiful equal lows in here. That'll definitely be the draw going into this week. Seeing how we anemically took the highs here, rejected last down close candle before the move higher. That's our breaker. Trade up into that, rejecting lower. And then retracement, which is to be expected after such a nice sell-off. Trading into the short-term premium. And then forming a swing high and then aggressively selling off. So order flow is absolutely bearish on RTY. Coupled with a bullish dollar, I will definitely be looking for lower prices. And then my attention goes to these equal lows here on the daily chart. And then through that, I like this inefficiency here in discount. So that's what I'll be looking for RTY. So the song machines, hopefully that covers your question. Dark, do you have mentorship, sir? So currently only working with one private client right now. That is currently not open. What I will be doing, as I discussed in last week's stream, is I will be looking to open up our private training programs in November going into December to close out the year. So keep a lookout for that. We'll update you guys. Again, our website is in the works, so we are still working on our signals. I'm refining that myself, refining a model that I'm going to be signaling for you guys that'll be manageable on a 5-minute time frame. So as we get the website rolled out, we'll start solidifying some dates for our mentorship signal service, and I'm just as excited about it as you guys are. So again, we'll keep you guys updated, and we are definitely working on all those things behind the scenes. High Speed Trading Company, you are the best. Appreciate all you do. Thanks for joining us, my man, and I appreciate the support again. Bean, for GU, why do you pick that specific inversion fair value gap? What about 6 daily? Yeah, it's a great question. Let me go and take a look at it. So let me go to my dollar loadout. All right, so why this specific inversion? What about the 6-8? So yeah, that's a great question. So why did I specifically use this one? Both of them would be valid. What I'm doing going into each session, not that I intraday trade pound or euro, I pretty much just swing trade those. My colleague, he definitely does watch them a lot closer in the lower time frames. What I'm doing is I'm just seeing where we're currently trading, and then I'll utilize the PD arrays that are in close proximity to where we're trading at. So now that we're here, I would definitely use this one, the June 8th, as you mentioned, and then this is definitely one I would be using now. So now that we've traded away from this old inversion, my attention would go to this one here. So it's really a matter of experience of seeing it over and over again, kind of know which ones to take your attention to, but also which one's in closest proximity. So now this is why I take my attention to that one. So great question. So they're both useful in the analysis, just really depending on where we're trading at the time. So when we opened the week and we were up here, this one was more influential in my analysis. Whereas now that we're down here, my attention goes to this one right here. All right, Bean, hopefully that covers your question, my man. Okay, great. Thank you. Hope you stay safe. You too, brother. Thank you. Mahmood, any plan to share entries during the trading week live? So with regard to specific lower time frame, 1 minute, 5-minute entries, how I'm trading, that's not something that I currently offer. Like I said, I will be doing a signal service for our company, and we will be offering that here at Adora Trading moving forward, going into the latter portion of this year or early next year, depending on what our schedule and what our time frame looks like. I give you guys the bias, I tell you guys where we're going, and then I also give you guys invalidation levels. So I'll share on an hourly chart. For example, I'm expecting us to go here. We should not go above here. That's the closest I can get you without having you on my lap and pressing the button for you. As we continue to progress and we go into signals, we'll give you very specific entries, stop loss, take profit, and where to close position. So that is something we will be offering. But currently, right now, I'm not getting paid enough to tell you guys where to get in on a 1 and 5 minute chart. So I give you guys the bias, tell you where we're going. It's up to you guys to position yourselves and profit. Again, I'm not a financial advisor, but I will be doing signals shortly. And then again, that'll have everything you're looking for with the entries, exits, and then everything we're doing here. Take the trades like the pros. So hopefully that covers your question, my man. So getting quite a few questions about gold. So let's go ahead and take a look at gold. And then check out if we have any more member questions, and then we'll go ahead and keep it moving. Beam, I've muted all other telegrams, LOL. Yeah, man, straight to the point. No fluff here, all business, my man. All right, let's go and take a look at gold. Forex.com. Yeah, Jay, I'll go ahead and cover what institutional order flow entry drill is, and I'll go ahead and share what that is and how we use that. So let's go and take a look at gold here briefly. So because I am bullish dollar, that automatically gives me a bearish bias on gold. Not that they're 1 for 1, lockstep, dollar higher, gold lower, but it does set a nice framework for a bias or context to work within. So we'll be looking for lower prices on gold simply based off the order flow here. Just really in a sloppy trading range between this high, this high and this low. And we've really just been banging around equilibrium for the past 90 days, so 3 months, just consolidating around equilibrium. So again, this is why I say there's a lot better markets to trade. If you're nimble, if you know how to trade, there's absolutely setups in here, and I know people that do very, very well in this market. Personally, it's not something I look to trade because it gives me a fuzzy, muddy analysis. I like markets where I can see clearly where we're going on a monthly, weekly, and 4-hour chart. That gives me the low resistance liquidity runs, tells me where the institutions are taking price, and how I can align myself with the institutions. Remember, we're not moving price. We're having to trade in line with these smart money entities that are moving price. So this is personally not a market where I just have that clarity, where I have that laser pinpoint precision. So I personally stay away from it. I like to stay where my strengths are, and it's not in a market like this. But again, I will give my analysis, just a gun to my head type of thing. So because we are bullish dollar, I will be looking for lower prices on gold. If we do get above this swing high on the weekly chart, then that would be bullish. But because we've just traded higher into a short-term premium of this range, I will be looking for lower prices on gold. But I would need to monitor how we trade inside this last down close candle, because it could be a bullish order block depending on where we're going. And the reason I can't qualify it right now as a slam dunk bullish order block is because I just can't gauge where we're going on a higher time frame because of the consolidation profile. So for the gold traders, monitor how we trade inside the bullish order block. If we do get above this swing high, then I would look for higher prices. My intention to go to the rejection block in here, and then the swing high. Forex.com, let's drop down into the daily chart. So a lot of back and forth. So we've traded higher into a short-term premium here, looking at the dealing range from high to low. Again, swing high formed, aggressively pulling back into the range. So now that we're in discount, we traded into this fair value gap in here. And then while I'm here, let's go ahead and cover what institutional order flow entry drill is as we have this. So institutional order flow entry drill, it's a partial entry into a fair value gap. So this is our fair value gap in here, where this candle's low and this candle's high do not touch. So it's inefficient in buy side delivery. It's just one single pass. So it's sell side imbalance, buy side inefficiency. So institutional order flow entry drill is when we trade into a fair value gap, but not more than halfway. So if I put the fib on here, consequent encroachment or midpoint is not even traded to. So this is institutional order flow entry drill, where it's just a partial entry into the fair value gap and then a quick run lower. Institutional order flow entry drill typically occurs when there's a PD array on the other side of the curve. So in this case here, we have a fair value gap, so balanced price range. That's typically where your institutional order flow entry drill will manifest. So dropping the gems on here free of charge today. So hopefully that covers your question for you, Jay. What is institutional order flow entry drill? You being, I love LOL, love how you find institutional order flow entry drill on the next asset you cover. Yeah, man, every day, every week, and it won't stop. So we're going to keep seeing it. Mustafa, what kind of services do you offer in private? So for right now, we're not offering anything. We just do YouTube, live streams, and then share my analysis in the Telegram. But I did tell you what we have coming up here in the future. So we'll update you guys there. Denisha, thanks for pointing them in the right direction. We do have a Telegram link that is open to everybody, and that's where we update everyone. Mahmood, thank you for your efforts. Thank you for joining us, my man. Nakeem D, grateful for all you do. Thank you for joining us. Much appreciated. All right, so I believe. All right, so we do have one more question from my man, Cyclos. So, hey bro, can you take a look at Euro GBP and share your insights? Sometimes I use Euro GBP to blend to which pair to be weaker or stronger between Euro and Pound. Yeah, great idea. I was actually going to touch on that as well. So just looking at Euro in contrast to Pound, so the best shorts will form in Pound. So just because the market structure, but also it's showing acceleration. So look at last week's delivery on Euro compared to Pound. Pound is much more weak, seeking discount much more aggressively. So Euro is not the best short, and it is the relative strength leader, and Pound will give you the most bang for your buck going short. Same way I covered S&P and NASDAQ, I preferred to short S&P because NASDAQ was showing it was stronger. Same concept, and now let's go ahead and look at the cross and how I validate that. So I was taking a look at this before. Not much clarity on the cross pairs. This is why cross pairs, you have to know exactly what you're doing. You have to understand when dollar's consolidating, because for example, looking at dollar, when we're in a trending model or moving cleanly in dollar index, cross pairs will look like this. So this is why you have to know exactly what you're doing in the cross pair market, because you can get stuck in a lot of chop if you don't know what you're doing. So just looking at Euro GBP here, short term on the daily chart, this is why I have been more bearish Pound, because we see here 1, 2, 3, 3 drives, unable to accelerate lower. And then we see here, last down close candle, displacement, trades back down into it, here finding support. So looking at the mean threshold of the down close, hitting it once, twice, and then accelerating higher. So because Euro Pound has been going higher, it's just not very clear to me right now. So just looking at this simply, it would bode well for a weaker Pound because Euro is showing it's more bullish. So because Euro is first in the name and it's bullish, it's showing that it's the stronger asset, which is why I was covering why I favor Pound for shorts. So as long as you remain above this down close candle here, which would be a propulsion candle, order block nested within another order block, becomes our propulsion candle. So as long as you remain above this, I expect us to continue gravitating higher for the buy side here. And then through that, I like this inefficiency. And then that should be plenty going into this week to know which is going to be the relative weakness leader. So hopefully that covers your question, Cyclos. Denisha, thanks for your time, Dylan. Enjoy the rest of your evening. Be safe in the charts this week, everyone. Thanks for joining us, Denisha. Always a pleasure. Hope you have a great week. Meme, amazing job. Thank you very much. Much appreciated. Eugene, did you attend Forex Summit? Are you planning on attending next year? So that's not anything that I have discussed making plans of. I have seen it, and I do know some people that have gone there. It's something that I'll potentially look into doing. Put a Dora trade in here on the map even more so. But with that, no plans on doing it currently. But if I do, I'll definitely let you know, and then I'll look forward to seeing some of you guys there. Mustafa, you must do private service, bro. All of us will join. I'll definitely keep you updated on that, my man, and thanks for showing your support. Jay, thanks, appreciate it. Thank you for joining us, brother. Olawale, thank you, Dylan. You being agree, my focus is on GU this week compared to EU, USD, CAD. Definitely, GU would probably give you the most bang for your buck. Absolutely. Cyclos, thank you very much, brother. Absolutely, it's a pleasure. Lotus Kano, big shout out to you. day one, and you know we're going to keep raking in the bread, Lotus. Let's keep it going. So going to go ahead and cover one question here. German Ortiz, thanks for all the concepts, and I'll ask how to use NQ and ES divergence to trade one or the other depending on their weakness or strength. Yeah, absolutely. So that's exactly what I'm doing. So again, I covered an example. You'll be able to rewind and see that again, how I used it. So again, just looking at this previous week, S&P did not make a higher high here, whereas the NASDAQ did make it a higher high. And then you'll see here that NASDAQ did not even reprice to the low end of this inefficiency, whereas the S&P did, beautifully hitting that there. So S&P was just the better short overall, and I do use SMT to confirm which asset it is I want to trade. And then for those of you guys that looked at the update on Instagram, I did share with you guys how I even use that intraday for my bias and my trades, how to know whether I want to short NASDAQ or S&P. So plenty of gems there. Be sure to tune into that. Hopefully that covers your question there, German. Eubene, do you keep up with the more recent concepts, the Reaper or Meduse? I do. So I study everything ICT has. Reason being is because the man's just on a whole nother level. Like I said, I have everything I need to be profitable and also generate wildly profitable students. But it's not something that I need. It's something that I'm interested in because this man is sharing stuff that the industry's never seen before. So I'm tuned in. I'm here for what he has to offer. If he leaves in November, I'll miss him, but business keeps moving forward. So I do tune into what he has, not because I need to, but it's just cool to see what the man Michael Huddleston has to offer. All right, so I think that's going to go ahead and wrap it up here, everyone. I don't see any more member questions. German Ortiz, thank you. All right, awesome. Glad that was helpful. All right, everyone. Or one more question here, Mustafa. What do you think about the market maker model? Yeah, it's great. It's definitely a great model to look to trade in. Great framework once you understand what you're looking at on the higher time frame. It's definitely something I utilize on a daily basis for sure. All right, everyone. So with that, I think I'm going to go ahead and sign off with that. So Silent PD, thanks for the gems, bro. Thanks for joining us. Rupen Patel, thank you. Awesome analysis. Much appreciated, brother. All right, so you guys take care, everyone. So appreciate you joining us. Going to be signing off here. You guys have a great rest of your week. Good luck and good trading.